Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be covering our 5 stocks with X dividends next week. So as you know, I picked 5 stocks. These have been selected because they all have price to earnings ratios less than 25, yields greater than 2, they've had increased revenue, net income, free cash flow, positive over the last 10 years, or pretty positive, and they are ticker symbols LNT, BLX, SIG, IDA, and PEBO. So basically, those are some wonderful looking stocks. The names for those stocks are Alliant Energy or Alliance Energy. Then we have Banco Latino Americano, we have Signet Jewelers, we have Ida Corp, and we have People's Bancorp, which is PEBO. So if you would not like to listen to me kind of ramble through these 5 stocks, you guys can head over to my website, the financial-investor.com. It will be the first link right on the homepage if you guys would just like to kind of read through the information yourself. So it does show what we screen these stocks for. It shows that we cover these. What we cover is their dividend days, price comparison to yield, PE to the average industry, payout ratio, dividend history, and a few other statistics. So these 5 stocks are ordered by X Dividends from January 25th through February 2nd. The first stock we're going to be covering is Alliant Energy, which is an energy service provider with approximately 1 million electric and 400,000 natural gas customers. They provide work over to the Midwest with regulated electric and natural gas services as its primary focus. Their ex-dividend date is on Tuesday, so you need to buy this stock on Monday or prior. You would then get paid out on the 15th of February. If you guys would like to learn about how ex-dividends work, when you should buy it, how the dividend payment gets removed from the stock price, I did make a video on that. I will link it in the description below. And also there should be a little notification on top right corner, learn about dividends. You guys can check that video out. Now here is their 10-year graph information. We have their price in the blue, their revenue in the orange, their free cash flow in the red, and their net income in the blue. So here we can see that their price is up 164% over the last 10 years. Now I included 10 years on all of these graphs because you can see here back in 2008, what happened in 2008, May, right around that time frame, we had what we call the recession period, where lots of stocks fell down 10, 20, 30, 40% based on, depending on the industry or the sector that they were in. This stock, however, if you had bought and held it 10 years ago, you would be up 164%, basically doubling your investment and some. We can see here that their free cash flow is positive over the last 10 years. There are these little spikes, so I would read back through the 10Ks, take a look at what kind of acquisitions they did, where they used their free cash flow those years. If that's something you're kind of interested through, I do these videos to kind of showcase the very, very quick information that can be provided through graphs. Once I kind of do that, I can see that, hey, a stock looks very positive over the last 10 years. Their yields trading over this price. They're looking like a good price to book value. Then I'll do a deeper dive, looking a little bit more at their fundamentals of the company. Take a look at who their CEO is, how long he's been running, what's his vision for the future for the company and such. So this is just a very, very quick information here that's provided. So that is their 10-year chart. Down here now we have their 1-year period. Just kind of taking a look at their 1 year. They pay out 0.335 for each dividend that you hold each quarter. Their yield right now is at 3.14, but they declared an increase of 6.35. That puts them at a yield of 3.34%. Their PE ratio is at 21.59. They're currently priced at $40.16, but they fell down to like a support level of around $39.50, right around that level, and they're trying to break out from this $40 price range, and their price to book value is at 2.23. The stock, when charted, it shows that the current stock has a higher yield price, which may indicate it is undervalued at this time. The stock is above the industry price to earnings average, above 60% payout ratio, and has dividend growth for the last 12 years, so very recession proof. Its price to book value is at 2.23, which is lower than 3.0, where value investors would consider a value. The stock is at a 21.3. The industry is at average 20.3. Dividend yield again 3.34, which is above the price. So this may warrant me taking a better look at their their balance sheet, taking a look at the fundamentals of the stock company, taking a look over the last 5 years of their 10Ks. So annualized payout $1.34 per share, payout ratio 68.71. Dividend growth 12 years, and annual dividend growth 6.35 for their dividend. This is a utility company, so pretty safe as far as customers aren't going to drop them and look for another utility company, because you're only able to purchase from the one. So very nice steady growth over the last 10 years. And their price did drop recently. It's a utility again. What happens with rising interest rates? Utilities and real estate investment trusts suffer. So that's something to kind of consider. Number 2 is ticker symbol BLX. Banco Latino Americano offers financial services for banks and corporations in Latin America and Caribbean. Their ex-dividend date is on Thursday, the 1st of February. You would need to buy the stock on Wednesday or prior to be eligible for the payout date on the 21st of February. Here we can see their graph over the last 10 years. They have exploded in free cash flow. Their price has increased by 242%. So 2008 didn't even phase them. If you had bought this stock 10 years ago, held it through, you would have doubled your, you would have quadrupled your investment. So 10,000 in would have become what, 40,000 and some change. So roughly $50,000 over the course of 10 years. Their net income is at 57%. So say 5% over each year average. If you just remove one of these, you'll see that their revenue is up 3% average per year. Their net income is up 5% average per year. Their price increases by around 24% year over year, and their free cash flow is at a whopping huge number up there. Now taking a look at just their 1 year information here, PE ratio 15.82, priced at $30.06. They pay out 38 cents or 0.385 cents for each share each quarter. Their current yield is at 5.12. Their price to book value is at 1.14. Now the BLX stock, when charted, it does show that the current stock does have a higher price to yield, which may indicate it may be overvalued at this time. The stock is under in the industry price to earnings average, above 60% payout ratio, and has had dividend growth for 0 years. Their price to book value is at 1.14, which is lower than 3.0, where value investors would consider a value. The stock is at around a 15.9, 15.8. The industry is at 16.3. So it does have a very nice yield, 5.12. Their annualized payout is 1.54. Payout ratio is pretty high, but financial bank style of company. And they did have an increase of 11.43. So if you split that, they increased it in 2015 was the last time they increased their dividend, and they increased it by 11.43. So if you split that up, that's roughly what, 5.7% increase. They kind of did it one big ol' jump at once. So if we type in their ticker symbol over here, BLX, they have had no dividend growth over the last year, but if you jump down here and take a look at their company over the last few years, 2013 at the very end they declared a dividend increase. They increased it in 2014 actually, so they've been increasing that dividend. Oh, here we are. There's actually another dividend right here. So they increased their dividend end of 2014. 2015 they paid out their dividend. They've been continuing to pay that out over the last 2 years. You can see they've had special dividend payouts, and they have locked their dividends through the recession periods, but they did continue to pay dividends, and then they did have to cut back their dividend there. So this could be a bit wonky if you're trying to buy and hold a dividend stock for the long-term growth of the dividend. Number 3, we have ticker symbol SIG. This is Signet Jewelers. They operate as a specialty jewelry retailer in the United States and the United Kingdom. They operate in several mall stores under Kate Jewelers and a variety of other names. One of the big ones, I suppose, would be Ernest Jones over in the United Kingdom. Their ex-dividend date is on the 1st of February, which is Thursday. Their payout date is on the 2nd of March. Here we can see their data here. This stock stopped paying dividends during the recession period. Let me go to SIG. So I believe they quit paying their dividends during the 2008 crash. Oh no, they actually, yeah, they stopped paying out dividends until 2012. That's why this information here, well, it doesn't show it, but their free cash flow began coming down. I believe that's probably why they began to pay from their free cash flow to their dividends or to their investors and such. But their price ran up huge after the crash. That didn't last too long. They recovered very nicely. Actually, this only shows what 2010, 2011 period, so we can't go back into 2008. But their stock ran up very fast, very high, and fell from 450% all the way down to 121%. So they lost a lot. So if you had invested over the 10-year period, you would have doubled your money, but it would have been best to have jumped out right at the end of 2015 in that period. Here we see their 1-year graph. They pay out 31 cents per share. Their yield is at 2.08. Their PE ratio is at 9.4. They're priced at $57.28, and their price to book value is at 1.62. So when charted, it does show that the current stock has a higher yield to price, which would indicate it may be undervalued at this time. The stock is under in the industry price to earnings average, below 60% payout ratio. It has had dividend growth for 6 years. The price to book value is at 1.62. It is lower than 3.0, where value investors would consider a value. So everything about the statistics, as far as what I can see right now, looks amazing at this current time. But what caused them to fall? Their items are probably just way overpriced, and that caused their stock to fall, or what happened here. So definitely look back, read the last 4 or 5 years of their 10Ks, their yearly, their annual reports, and take a look as to why they fell from grace. And here we can see here, annualized payout is roughly 2.16, or they pay, dividend yield 2.16, pay out $1.24 per share, payout ratio 19.1, which is super low. Dividend growth 6 years, annualized increase by 19.23. So maybe next time we have a recession, they'll actually continue to pay out during the recession because they have the earnings to be able to do that. Number 4, we have ticker symbol IDA. They have the Indicorp. They engage in the generation, transmission, distribution, sale, purchase of electric energy in the United States. They operate 17 hydroelectric generators and develop all sorts of different equipment. Their ex-dividend date is on Friday, the 2nd of February, so you do need to buy the stock on Thursday or prior. You will then get paid out on the 28th of February. This stock has had a very nice run up over the last 10 years, basically doubling and then doubling your money once again. So very nice. Their free cash flow did take a bit of a dip after the 2008 recession, and see, they've had dividend growth over the last year. So what they probably did, if we were to look up this stock, I would guess that they probably locked their dividend. They didn't want to lose their shareholder, they didn't want to hurt their price. So what they probably did is they locked their dividend, didn't increase it. Oh no, they actually dropped it. So they dropped their dividend from 0.47 to 0.30. Oh no, this was recession period right here. See, they locked their dividend through the recession. That way their investors would not jump out of the stock. Their stock did recover. It doesn't show the information back into 2008, but I'm sure the stock did recover very nicely. You can see over the 10-year period up 199%. Free cash flow up 259%, net income up 59%. Very nice steady net income increase and revenue increase. So the revenue goes up roughly 2% every year, net income up 5% every year. So that could be pretty slow for a lot of investors, but utility company, and they recently fell quite a bit here. You can see they were maybe at 200%. They're probably a little bit higher than 200% because they're probably at like 225, 230 before falling down at 199%. And here we can see that their stock price was at $97. They fell down into the $85 range because, again, utility company, as the Fed is hiking up interest rates, that causes utilities and real estate investment trusts to kind of fall. So we covered that chart. Here they pay out 59 cents per share each quarter. They are currently yielding 2.63%. Their PE ratio is at 20.75. They're priced at $85.28. Looks like they hit their support, which, another buying opportunity here where their yield exceeds their price. Their PE price to book value is at 1.91. So when charted, it does show the current stock has a higher yield to price, which indicate that it may be undervalued at this time. The stock is over in the industry price to earnings average, below 60% payout ratio, dividend growth for the last 6 years, price to book value at 1.91, which is lower than 3.0, where value investors would consider a value. The dividend yield is at 2.77%. It does look like it kind of wavers in between 2.63, 2.77. So this information here could have been pulled off today, end of day. Maybe it had another dip where it fell back to its support level, but payout ratio is actually under. It's under. Below 60% payout ratio. Dividend growth 6 years and annual dividend growth of 7.27%. So here we can see that their dividend increase began back in 2012. They began increasing their dividends over the last few years. So they've actually increased their dividends for 6 years. And even then, you were getting a pretty nice yield, pretty consistent dividend. They didn't cut their dividend, besides back in 2003 period. So they did cut their dividend back then. Number 5, the final stock we're going to be covering is PEBO. This is People's Bancorps. They provide various financial services and products that include commercial and retail banking, insurance, brokerage, and trust services in the United States. Their ex-dividend is on Friday, the 2nd of February. They would then get paid out on the 20th of February. Their net income is up, 31% year over year. Their price of the stock goes up roughly 10% every year, or it's up 108% over the last 10 years. This stock did take a bit of a hit back 2008. You can see 2008 period here sometime. It did fall quite a bit, picked it right back up during 2009, fell again in 2010, picked it back up, and then kind of trailed sideways. You wouldn't have, it would have taken you roughly 4 or 5 years to have made your money back from that investment, but at the same time, they have been paying out dividends for 2 years, dividend growth. So PEBO, hold on one second, let's take a look at that one. Did they cut their dividend? Did they just pull it back? What did they do with their dividend during the recession period? They did cut their dividend from 23 cents down into 10, so they did a GE there and just sliced their dividend in half. So this could be a risky one to kind of get into if you guys are looking at financial stocks to jump into. So they currently pay out 22 cents per share. They're priced at 34.27. Their PE ratio is at 17.05. Their yield is at 2.45%, and their price to book value is at a 1.3. So when charted, it does show the current stock has a higher price to yield, which would indicate it may be overvalued at this time. The stock is under in the industry price earnings average, below 60% payout ratio, dividend growth for the last 2 years, price to book value at 1.34, which is lower than 3. Stock is at a 16.9, industry is 20, dividend yield 2.54, average around, it's 2.45, 2.57 right now averaging. Annualized payout 88 cents per share. Payout ratio 41.98, dividend growth 2 years, and their annual dividend increases are by 10%. So very nice increases there. If you guys would like to read the article, again, the link will be in the description below and in the comment section if you guys would like to watch over here. And of course, at the very end of my videos, I always like to pick one stock. If I had to invest in just one stock that I covered, it's not saying that I would invest in it or that I am going to be investing in it, but if I had to pick one stock over to just kind of buy and hold, I would probably pick the Alliant Energy, kind of going off the charts, it's a nice steady increase. There's none of these huge pullbacks in their price. They've gone through recessions, they've paid dividends through the recessions and have continued to pay dividends. A lot of these other ones, you know, their price increasing, their revenue increase, the free cash flow. This is, you know, another nice one that looks pretty nice. Looks like a good entry point right now. So I would definitely do more research on Alliance Energy and on Idacorp. Those would probably be the two ones that I would, base off the chart that was, you know, the charts that were provided to me, I would want to take a little bit more deeper look into the fundamentals, their balance sheet, their 10Ks, read over the last 5-10 years, kind of look how they've changed, what kind of services or products and such that they offer. So that is it for this video. If you guys have enjoyed the content, remember to hit the like button below. If you guys are brand new to my channel, subscribe for future financial videos. I really appreciate you guys. If you guys aren't subscribers, thank you guys. Again, if you have any questions about anything that was covered in the video, please leave a comment below. I will always reply back to you guys' comments. Thank you guys for tuning in. Again, I am not a financial investor. The information provided in this channel is just for fun and entertainment. If you guys would like to, let's see here, you know, it's just me kind of talking as a financial investor myself, trying to give information to help others make their money work for them and make good financial decisions, I suppose. But that is it for this video. I will see you guys in the next video. Bye bye.